thinks that you're owning, thinks it will be of future benefit to your company, this side of the equation are the people that have a claim to that asset. And I think we talked about that 2 weeks ago, but I just wanted to refresh our memory just a little bit about it. So if I had a $10,000 van, for example, and I didn't owe a penny on that van, who can claim the van? Somebody like the bank, or is it all belong to the owner, right?
It all belongs.
So that would be here. So that would be 10,000 would equal 10,000. But if I owed $6,000 on the van, right? Then how much of it would belong to the owner?
4,000.
So these two guys on this side are the people that have a claim to your assets over here. Now that's just a real quick part of Chapter 2 that we'd already discussed earlier. Now, we're going to take a few minutes to talk about some of the transactions that we did the last time. I think we had a business of a scooter business. Do y'all remember us doing that? Who was my person that? Ashley?
She owned it.
Did you own the business? Okay. That's okay, isn't it? Ashley owned the business, and it was a scooter business, and she was going to be making deliveries around campus, is the one that we used. And with those deliveries, she thought that this was a grand idea, so she took some money out of her personal account, and she deposited it in an account that was separate for her business, because she's not going to ever mix personal with her business account, right? Oh, that's fun. So, what?
It was doing so well.
The last time I tried to do a video, I'll have to just stop and tell you this because I know it's already going to be on there anyway. I did the whole video without putting my microphone on. And then another one, my daughter called the whole time, so it was like, ring, ring, ring. So, yeah, those things happen. Sorry about that for those of you that are watching the video later. So, with our business, you're going to deposit $2,000 as an investment in the business. So when we began all of this stuff, we want to talk about what accounts that would involve. And remember, we're in double entry accounting, so it's going to be two different accounts that we would talk about. The first one is going to be cash. Cash being an asset, something that we own. And when she put $2,000 in the business, what happened to that? Cash went up, right? Now, who has the claim to that? Does a person, does a creditor that we owe the money to? No, instead it's going to be the owner, right? And we talked about the owner's equity being under an umbrella where capital is going to be like the top of the food chain here. So that is where the $2,000 goes. So now you can say that you're still in balance because this $2,000, if I'm standing over the equal sign, am I in the middle? This $2,000 on this side of the equal equals $2,000 on that side of the equal. Correct? Thumbs up if we're good for that. Okay. So now let's look at the second one. And the second one was a purchase of an asset for cash. And Ashley hired somebody new for her business to help her. And who did you hire? She hired Miss Kelby. Okay, so when she hired Kelby, she thought that Kelby wanted a scooter, Ashley wanted a scooter. Both of you girls were going to have a little something to ride around with, okay? Ashley's going to get the first one, so she goes out and she buys a scooter for $1,200 in cash. What happened up here? What happened to her cash when she bought the scooter?
It went down.
Cash went down. She just exchanged that cash for something else. And what did she exchange it for?
A scooter.
A scooter. So now she owns a scooter instead of cash. But both of them are assets, something that she owns. So I'm going to make a new one over here. There's not much room. Then I'm going to call delivery equipment. All right. And on this delivery equipment, we had $1,200. That was our new scooter. And what happened to cash? It went down, right? Everybody clear? Okay, we're going to do two more, and then we're going to talk about something new that we're doing with these same guys that we just discussed. Yeah, we also wanted a scooter, So we're going to buy her a scooter too, and her scooter is going to be for $900. But obviously, we don't have a whole lot of cash going on right here, do we? So for that $900, we're going to say we'll gladly pay you later for this scooter today, right? And so, $900 scooter is going to affect what accounts? It's going to be a liability, and it's going to be an asset, right? And the asset that it's going to be is delivery equipment. It's going to be going up. And what happened to our liabilities? Which, by the way, is going to be called an accounts payable, because now Ashley's going to have to pay for that scooter later. She now owes more money, so that means that it went up $900. Everybody agree with that? Rebecca?
Okay, so on the first scooter that you paid $1,200, it just stays on the asset side. It doesn't go over to the other side at all.
That is correct. Good question. The first one, she purchased the scooter. She had this much money over here in her asset bucket. She took some of her assets and she bought a scooter. So she traded some assets for another asset. So it didn't involve this side at all.
Okay.
Because her asset number didn't change over here. The total assets still remained the same. It was just an exchange. So she had a plus and a minus on the same side of the equal sign.
That was my whole problem.
Are you serious? There you go.
I was trying to.
You were trying to make this always happen over here. Think about it like a math problem. And if you were to say 5 minus 5 plus 2 equals 2. Is that true?
Yes.
Because what happened right here? Can I plus and minus on the same side of the equal sign and still remain in balance? Yes. This is a plus and a minus on the same side of the equal sign. It just cancels out. This side still remained a 2. Okay. All right. The next one is Ashley's going to make a payment on the scooter of $300. Now, does that change this value of the scooter?
No.
The scooter's in there like flint, okay? Now what's going to happen is this is going to be going down by 300, and what's going to happen to my cash?
It's gonna go down.
It is also going down by 300. Any questions so far? Okay, we'll do one more, and then we're going to make a little different change to things. I'll tell you what, this is probably a good stopping spot. Let's just do it right here. Do you remember the first part of chapter 2? We didn't divide them up into cash and delivery equipment. That first problem, we were running everything through this one column of assets. And then some of you were like writing on the side like, this is cash. This is cash. But yet everything was an asset. And now we've decided to break it into 2 parts and say, they're still assets, right? But we're going to categorize them somewhat. True? Well, today we're going to categorize them just a little bit more. I'm going to make a new one for cash and rewrite this up here. So instead of having this one long column of plus, minus, minus, plus, minus, 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 plus, 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 all in one thing, I'm going to divide it in the middle. And I'm going to say, let's just keep track of all of the pluses on one side and all the minuses on the other. Would that be easy? So I'm going to say, what would this one have been? If I were to say that this side is my plus side and this side is my minus side, then that 2,000 would have been here. And I could write the 1,200 here and the 300 here. Then, if I wanted to find out the balance of cash, I could, they call this in the accounting terms a foot, like bottom of the thing, okay? I could say, well, this side is 2,000, and what is this side? 1,500. So my balance at this point is what? 500 on the plus side, because your balance is always going to be on the high side, isn't it? So I could then put 500 right here as my balance. Would that be the same as looking at this one and saying 2,000 minus 12 minus 300 would be? Right? So I'm not really doing anything different. It's just that I'm organizing things a little bit better. And I'm not having to use these minus signs. around, okay? So, we're going to erase this guy. And let's go ahead and make delivery equipment look the same way. I'm going to go ahead and erase this off the bottom because we're going to play with cash a little bit more. We're not ready to balance enough yet. This is delivery equipment, and I had $1,200 and $900 in it. And I split this one up. If I plus over here on this side of this asset, I probably want to be consistent, don't I? So I'm going to also then have that. Was it a 900 there? But I haven't subtracted anything out of that account. Is that easy? Are you with me?
I like that a lot better.
I like it a lot better, don't you? Lots better.
The only way you would delete anything from the delivery equipment would be selling it, correct?
That's correct.
Okay.
Okay.
Okay. So, here's another way that I want you to remember this, and I want you to be interactive with me because you know if you speak it and you hear it, you can remember it a lot better. We're throwing more marbles in there so we can remember. Here's my equal sign. And here's my memory hook that I'm going to give you. Everything to the left of the equal sign is going to increase on the left. Okay, so let's repeat that again. Here's my equal sign. If it's on the left means that it's going to be an asset, right? On the left is going to increase on the left side. So if I have an account called supplies, supplies is an asset, right?
Yes.
Right.
And I'm going to increase supplies on the left. Is that good? If I have one called prepaid insurance, which by the way is an asset because it provides a future benefit, because prepaid insurance is an asset and it's on the left, then I'm going to increase on the left. Are we good?
Yes.
Thumbs up? We're good? Okay. So every asset that I put up here, we're going to increase on the left. By the way, this little guy is called a T account. It's just a novel idea, isn't it? It looks like a T. Okay, let's take a look at accounts payable. Can we do the same thing with accounts payable? Keep up with everything that's a plus on one side and minuses on the other side?
Yes.
We can do that, can't we? But, I hear that little but? Go with me. If it's on the left side of the equal and I'm going to increase on the left, if I were to follow that same pattern, liabilities is on the right side. So where do you think I'm going to increase a liability? On the right side. Can y'all remember those two numbers?
900, 300.
So if I'm increasing on the right, then I had my 900 and my 300 would be over here. Let's do it again. Do it with me. Here's my equal sign. Everything to the left of my equal is going to increase on the left. Let's do it again. Here's my equal. If it's to the left of the equal, it's going to increase on the left. To the right of my equal, it's going to increase on the right.